Welcome back to Rekt Radio, the one and only show that looks at a market full of uncertainty and sees the greatest buying opportunity of a generation. I'm Sunny, and folks, if you're not trembling with excitement, you're just not paying attention.
And I'm Cole, here to remind you that the feeling of excitement and the feeling of sheer terror are often indistinguishable right before a financial catastrophe. Let's try to decipher the market's nervous breakdown before it takes us all with it.
It's not a breakdown, Cole, it's a breakthrough. And the biggest sign is who is trying to break down the door to get in. We have the SEC absolutely swamped with ETF filings. And the latest? A filing from Trump Media for Bitcoin and Ethereum ETFs. You can't get more mainstream than that.
Oh, you mean the company whose stock is a political meme in itself? That's not a sign of mainstream adoption, Sonny. It's a sign we've reached the circus phase of the bull run. The SEC didn't approve it. They punted the decision down the road, just like they did with a half dozen other filings for assets like Solana, XRP, and even Dogecoin. They're not rolling out the red carpet. They're calling security.
It's not a no, it's a not yet. What could this become? This is the playbook. The SEC has to be deliberate. They have to check every box. The fact that they are even reviewing applications for a diverse range of assets beyond Bitcoin shows the entire space is being taken seriously. The demand is undeniable, and the regulators have to respond. This delay is just building up the pressure for an even bigger flood of capital when the gates finally open.
What are the risks right now? The risk is that these are low-effort filings designed to generate headlines, not returns. The SEC is clearly in no hurry to approve an ETF for Dogecoin, an asset that was created as a literal joke. This isn't a sign of a maturing market. It's a sign of a speculative frenzy where everyone is throwing spaghetti at the wall to see what sticks. The regulators are showing extreme caution, and that constant rejection and delay will eventually lead to market fatigue. Not a coiled spring. We're celebrating paperwork, Sonny, not progress.
But while the regulators are busy with paperwork, the smartest money in the world is voting with its dollars. Forget the filings for a second and look at the approved products. BlackRock, the largest asset manager on the planet, has been quietly, systematically absorbing the world's supply of Bitcoin. Their spot ETF, IBIT, now holds 3% of all circulating Bitcoin. 3%.
Let that sink in. We are cheering the fact that a single Wall Street behemoth has accumulated a systemically critical chunk of a supposedly decentralized asset. This isn't the victory you think it is, Sonny. This is a centralization event happening in plain sight. We've spent a decade talking about the importance of not your keys, not your coins, and now we're celebrating because the biggest bank of them all holds the keys to a vast and growing portion of the network.
It's the ultimate validation. It's not just a fund, it's a gateway. BlackRock is the most trusted name for the largest pools of capital in the world. Pension funds, sovereign wealth funds, you name it. They are creating the secure, regulated, and accessible bridge for trillions of dollars to flow into the ecosystem. This is how Bitcoin goes from a niche asset to a global reserve currency. They are the on-ramp for everyone who is too scared or too regulated to get in before. This is the supply shock we've been talking about for years, happening right now.
You see an on-ramp, I see a single point of failure. We're just rebuilding the old system we claim to be replacing. What happens when a government puts pressure on BlackRock to freeze assets or censor transactions? Their 3% stake gives them an immense, unprecedented level of influence over the entire Bitcoin market. A decision made in a boardroom in New York could send a tsunami through the whole ecosystem. We've traded a distributed, resilient network for a system where we all have to hope the guy with 3% of the chips doesn't flip the table. That's not progress, that's a gilded cage.
It's the evolution of the market. It's messy, but it's how we grow. You have to bridge the old world with the new. But I know how we settle this. Forget the narratives about the SEC and BlackRock. Let's look at the cold, hard data. The charts don't lie. Let's pull up the technicals for Bitcoin on the one-day chart from TradingView and see what the market is actually thinking.
All right, let's consult the oracle. I've got the chart right here. The overall summary, combining everything, is neutral. The market is perfectly balanced on a knife's edge, no conviction in either direction.
A perfect consolidation. That's the calm before the storm. But we need to look deeper. Let's start with the big picture, the powerful underlying current. What are the moving averages telling us?
They smooth out the daily noise and show us the real long-term trend.
The moving averages are flashing a strong buy. Exactly. That's the ball game. The deep, foundational trend of the market is incredibly bullish. The conviction is there. This is the powerful tide that eventually lifts all the boats. The long-term holders, the smart money, they are positioned for a move higher. That's the signal you can't ignore.
If you say so, but while you're looking at the tide, the actual boat is taking on water. Let's look at the oscillators. These measure the immediate real-time momentum. They tell us what's happening right now, and they are flashing a clear sell, not neutral, Sonny, a sell.
Ah, a classic and beautiful divergence. This is the most bullish setup you can ask for. You have the short-term, twitchy, emotional traders hitting the sell button, probably spooked by the SEC news. That's the sell signal from the oscillators. But the long-term, powerful moving averages are holding firm with a strong buy. This shows the market is absorbing the panic perfectly. The weak hands are being shaken out, selling their coins to the strong hands who are focused on the unshakable long-term trend. It's a textbook bull market consolidation.
That is a terrifyingly optimistic interpretation of a market having a seizure. You're looking at a lagging indicator, the moving averages, which just tells you the past was great. And you're ignoring the leading indicator, the oscillators, which is telling you the present is falling apart. The momentum is dying. The buyers are exhausted. The fact that the strong long-term trend can barely keep the overall summary at neutral against the selling pressure is a massive red flag. This shows the trend is losing its strength and is on the verge of collapsing. This isn't a pit stop, Sonny. This is the engine seizing up right at the peak of the mountain.
That's all for this episode of Rekt Radio. I see a world where institutional demand is becoming an unstoppable flood, and the charts are showing us a market that is simply gathering strength before the next historic surge. Stay bullish.
And I see a world where regulatory walls are getting higher, where decentralization is being traded for a Wall Street master, and where the market's engine is sputtering warnings for anyone willing to listen. Please, be careful out there. You've been listening to Rekt Radio.